Good morning, everyone. Welcome to the On Time, On Target Morning Brief. Go ahead and let me know in the chat if you have any issues hearing me, and or let me know if you can hear that loud banging in the background. I'm on AirPods. I used these way back when I started this, and there were some issues with a little crackling in the right one. Anyhow, there's much larger fish to fry today because there's about 20 people on the roof banging away. Anyhow, so good. Thanks, Apex, for letting me know there. Welcome to the show, everybody. Welcome to the On Time, On Target Morning Brief, where we invest in fighter pilot precision on a daily basis. If you've looked at the futures today, you've seen red, and not just red like blood red, right? Like 500 points in the Dow. Basically 1.5% across the board. Is it a big deal or is it not a big deal? That's what we're going to talk about today. We're going to go back and finish our question yesterday. Remember, we got cut short by my computer deciding to reset. Thanks, $1,600 Mac, for randomly resetting in the middle of my show. Hopefully that's a one and done thing instead of a regular occurrence. But yeah, that's what we're going to talk about today. We are also going to talk about some longs and shorts, if you will. If you were tuned in early, you saw it on the screen there. GAN took an upgrade. That's a long. I don't think I would go anything long here. I don't see the market screaming higher at all in the in the at least the first few minutes. Maybe it does later today when things calm down, but it's kind of in a sell-off mood right now. And then two shorts for you out there. DraftKings, what? That's one of my favorites. Yeah, that's meeting all the criteria this morning. They got hit with a lawsuit, a patent infringement lawsuit last night from GAME. So GAME is up like 18%. DraftKings is down 5% and could sell off from here. If you saw the chart, we'll come back to it in a minute. It looks kind of ugly this morning. And then Freeport McMoRan, they had a downgrade to an underweight. So anyhow, a couple of good shorts for you out there. I'll get these ready to repost in the room in case somebody else shows up a little bit later. This is not working either. Control and paste, and then we'll get started. There you go. All right, if you're catching us on replay, thank you so much for checking us out. Make sure you subscribe, notifications, if you want to try a free trial in the room. Remember to reach out to me through the OTOT Now website like someone did yesterday. I don't see them in the room today, but hopefully they join us. And if you want to come in for a week for free, check it out. You can. What you don't see on the screen is a chat window and a Q&A window. With that, let's go ahead and get started. All right, welcome back, everyone. Here's the lineup card for today, Thursday, July 8th. All right, make sure you have your chat window and your Q&A window open and set up appropriately. Standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence before acting upon anything you hear this morning. Full disclaimer information is available at ototnow.com. Our mission objectives, as always, grow our money, protect our money, and live off our money. Not what are we going to do with Chinese stocks, but is today's sell-off going to continue? And I think it does. And I'll tell you why once I'm today's sell-off going to, can't type either, going to continue. Yeah, I think it does, right? We've had multiple highs. We'll take a look at that. Multiple highs, more highs. We've totally forgotten about the inflation, right? So what's driving the sell-off this morning? You'll see it in the headlines. Everybody's worried because bond yields are dropping, right? It's time to refi again. Inflation is completely gone again. Hey, was it transitory? High five. That's what I said, remember? And also that, Chairman Powell guy also said it was transitory. Everybody's done freaking out about inflation for right now, and they're freaking out that bond yields are back going too low. I don't know, maybe people are just looking to freak out because that seems to be what's happening. But the real point there is taxes are on the horizon. At some point, you've got China cracking down on their tech firms. So you do have some things to be negative about. Plus, a simple reversion to the mean means we can come in 10% here and not even think twice about it. So that's what we'll take a look at on the charts there. I'll show you that. We'll get to what is an ADR. We went to talk about it yesterday and got cut off. For the flow, it'll be long, short, open, short, long. We'll do a market review, headline review. We'll take a look at the S&P 500 and get through the open. So let's go ahead and switch over and look at that S&P 500 right now on the TD Ameritrade Think Pipes platform. Here it is, 9-month chart. So we're here after, how many days in a row, basically 10, we took a day off here, but like 7 up days, an off day, and then new highs again yesterday. If you back this up, we're like 9 months on going on new highs, basically. I mean, it's not exactly a straight line, but pretty close, right? We have not had any major moves down. So when I say it could go down 10%, 10% of 434 is 43. So that takes us back below 400, and that would be a simple correction. And those happen. I'm not saying that's going to happen. I'm saying if it does happen, it's not time to freak out is all. The haircuts do happen. No big deal. Markets cannot run up forever, nor do you want them to run up forever. You don't want this market just to power higher and higher and higher and higher and higher and higher and higher, because it doesn't end well. We've all seen that movie. So let it take a breather, take a day off. You don't have to worry about your portfolio other than some big red numbers that you may worry about. But hey, if you got money on the sidelines, now is the time to start thinking about bringing it into work. Maybe we do get that 5 to 8% sell-off. We shall see. Putting some new money to work with some folks that had equity events recently, and you know what? It's tough to buy Apple here. It's tough to buy Amazon here. Pushing $4,000 a share. Well, it's tough to buy some of the big tech names. I don't know if they're going to be hit. I'm certainly holding them. I would never not consider selling them, but it's tough to just load up on them here, right? You have to find names you can load up like Alibaba if you have the stomach for it. All right, come into the 5-day chart. A little get close. Speaking of Alibaba, there it is. Yeah, this just gets uglier every day, right? Has not cracked below 200 yet. Probably today, right? I don't think a big sell-off in the U.S. market's going to be a day that Alibaba goes screaming higher. It's coming. So anyhow, so let it go below 200, and then you can start in on your buy there. But let's look at the 5-day and the SPY. That's what we're looking at. Here's your big move down. Yep, erasing 3 gains of the stair stepping up, take the elevator down. We're back to here. Not even worried about it. Here's our day trading chart kind of set up. Messed up my chart a little bit here, so it's not quite as perfect as normal. But again, GAN is long on increasing their forward guidance, and then DraftKings is short off a patent infringement lawsuit, and Freeport McMoran is short off of a downgrade. So I like the shorts better. We'll come back to those here in a minute. All right, going over to CNBC.com, refresh these futures real quick. Not as bad as they were earlier. A little bit of a bounce. Everything was down over 1.5% earlier. You see the Dow drops nearly 500 on global economic comeback, and the bond yield sliding. Remember, we were worried about inflation, and OMG, what's going to happen if the 10-year hits 2? Well, we'll get to that here in a second. You got Europe selling off hard, 2% plus across the board. Asia selling off kind of hard in Hong Kong, just a little bit in Japan and China. Here's our bond number, all right, below 1.3. We were freaking the heck out when it was going 1.7, marching up to 1.8. Oh my gosh, these are almost back to like normalized numbers. No, came crashing right back down. So that's where we are with bonds. You don't have to sweat inflation anymore. We'll see what comes out with the CPIW towards the end, and see what COLA adjustment they do now for Social Security, because they were thinking it was going to be above 4. Well, you can't make it above 4 now because it's way down low. Oil not going higher like many have thought it might. Gold and silver going higher just a little bit, and then crypto had a huge sell-off last night. So 5%, 9%, 7% kind of across the board. Don't know what's causing it, kind of don't care. All right, let's look at the headlines we have. Analyst calls of the day. Well, we have to check out what they're saying about Amazon. You can't be downgrading it. So NVIDIA price target up. DR Horton downgrades from outperform. Okay, the housing market may have peaked. I'll buy that. J&J overweight, a little bit boring, but maybe. Okay. AMD, you can load up on AMD chip. They're going to benefit from the chip shortage. Dollar General's a fine holding, nice and kind of safe, if you will. Don't really know about Etsy. MGM, Caesars, Best Buy, I would say Win. Win has not performed very well since I bought it, but that's my play. Downgrade of Charles Schwab. I swore they said there was an Amazon, reiterates Amazon as top pick. Aggressive. Yep, I buy all of that. All right, let's take a look at some other headlines that are out there. We did get a jobless claim number this morning. 373. I think that was about on pace with the expectation. Meat-free chicken tenders. There's a new one. Yum. Yum. I was curious as to what's in a chicken tender anyway, because it sure as heck isn't chicken. So now I'm really curious as to what they are replacing the not chicken with for, bubble gum. I don't know. I don't eat nuggets anymore. I think my kids have actually given up the chicken nuggets too for good, and I'm okay with that. All right, don't see anything else of note from the headlines. Looking at the futures, yep, still bright red across the board. All right, let's go over to TD Ameritrade Think Pipes and get set up for the open standby one. Good morning, everyone. Welcome to the On Time On Target play of the day. The Think Pipes platform in front of you. With 15 seconds to the market open, you have 4 frames. They are all 1-minute charts. We have the S&P 500, which is bouncing a little bit, but just remember it's down over 1%. We have our long, which is GAN. I don't like that very much. I do like both shorts in DraftKings and free. There is the opening bell. So let's pass on GAN for a second. Look at DraftKings. You're going to need a 50-cent stop. Speaking of yesterday, if you followed Alf higher, holy crap, that was like a 22-hour move. Even though we busted out of it early, it ended up over 25% on the day. Okay, this is good. This is good. 46.9 is the high of the day. 47 is the high of the day. So again, 50 cents down to the short side. So 46.50 would be our entry point. So we're not right at it. We've got plenty of time. Is this even trading? Oh, there we go. FCX. So 4% here, 6% here, over 10% in the GAN. I just don't think that's that strong of a story. So let's go. 34.14 be 30 cents. I don't know if it can continue to sell off. Let's go back to this one. So 46.50. We'll go with a tight stop here. We'll go 40 cents instead of 50 cents for DraftKings. And it's power and higher, so got to go 47.05. It's going to make me do hard math. Nope. Okay, math's about to get easier. So went up there. All right, 47.20. So 46.80 is our entry point to the downside. That's a 40-cent stop. As long as it holds the high of the day here. Oh, that's a fantastic. I don't know if you can hear that or not. That's loud as all get out in here. That has to be a saw. Can't make that up. Hopefully you're not hearing any of that. All right, we're going to give up on DraftKings. It's just power and higher. Let's use a 35-cent stop here in Freeman McMoran. So 45 would be a, let's go 30 cents. Let's go 25 cents. So as long as this holds, we're at 34.20 will be our entry point to the downside. 34.20 is the entry point with a 35.45 stop. So it's a 20. So for your sizing, 25 cents there. There's plenty of volume for this. It's got to hit it though. It's got to drop down below 34.20 to hit it to the downside. If it powers higher, look at this going on over here. So you've got this going higher, this trying to go higher as well, even though that's our short of the day, and DraftKings just not working. GAN's not working, so good thing we're not taking that. I do like the double top here. So again, protecting ourselves. This is going to hit. There it hit 34.17, 34.20. Get into this short with a 25-cent stop. Doing the quick math, 33.95 is the first R point, and I'll get you an arrow squished in here to let you know that this is to the short side. So nice double top there, forming the high of the day here at 34.42. We have that covered by 3 cents and have a nice trade in place. So we would need it to basically go down to 8.5% on the day, which I think it has the ability to do. Let's zoom out and kind of see if it's been down there. Zoom out a little bit. It is not. So this would be free falling to where it was before pre-market. So I think the market is going to finally top out and start to roll red here. And then we're going to turn around and see this thing moving to the downside pretty significantly. So again, 33.95 and then 50 cents that 33.45 is your exit. So if you're programming it, go ahead and type that in. 33.45 is your parameter on the downside. 34.45 is your stop on the upside. All right, we've got that in there. I don't see anybody blowing up the chat, so it must not be as loud as it is in here. I'm going to leave you on this chart real quick, so you can still take the trade right here. All this is good, showing strength to the downside. All right, so FCX, we're in that. Let's talk about what's going on in the longs. Big move up in TQLB. That's a spec. Let's see what total is 7 names here, including 2 bond names and gold and a miner and CBD and mineral resources. And I even forget what TQLB. So hardly anything's in the green. Dare I click the red? How painful. Is Luckin going to lead the pack? It was all over the map this morning. Yep, 7% down. Almost put it on the short list. AMC 9%. DD continues to fall. Excuse me, continues to fall. Probably will for a while. NEO, I'm not ready to buy more DD yet, so let's pull that chart. DI. Not yet is, like Chappelle when he was asked about being on Dancing with the Stars, he's like, not yet. So not time to load up on DD yet. If this gets below, if it gets single digits, then it's time to buy. Or you see a sustained move higher, which is not just one day, but a multiple day sustained move higher. So FireEye, KWIB selling off, GME, GameStop selling off, Alibaba, Roblox, gosh, lots of favorite names in here. QClean, CRISPR Therapeutics, Trade Desk. So DraftKings, not as bad as you thought though, right? They were down 5% earlier. So maybe that's a frivolous lawsuit since they're not selling off very hard. Or they were able to take to the microphone and quell everybody's fears, which is what you need to do in that situation. The sooner you talk to your folks, the better off you are. All right, so back to the upside. Gosh, not much on the upside here. All right, check our trade real quick. Trade is in the green. Remember, we took it 34.20 south, so we will come back to that here in a second. Q&A, how do you short a position you're holding long? You generally have most people have a trading account. Otherwise, you can, but generally you're taking a position. So let me answer that. So if you are in one account where you already have that position long, then no, you're simply going to sell your shares and then short the rest past that, right? And there's a tax implication, so you simply take a pass on it, unless you want to get out of that and and then get your have the tax bill for it. Now, if you're in a different account, you can simply just take the trade, right? You could probably make a wash sale argument, but I think you're okay as long as you just let's do it in a different account and do a day trade. Don't hold it overnight. If you want, but generally the position sizes are such that if you're scalping something like with a 25-cent R, you could be holding like 2,000 or 3,000 shares with the intent of getting right back out of them, right? So in that case, you'd either stay clear or sell the shares you have and then continue to short and then go back to even, if you will. So if all of that makes sense. But when you put the order in, it's going to ask you, hey, do you know what you're doing here? Because you're going to sell your long position and then you would add to the shorts. All right, this is working here. So the next stop is 33.71. would be the second R. I'm going to leave this up while I talk on the other screen about ADRs. So an American Depository Receipt, we talked about this yesterday with Alibaba. Again, Steve Weiss was saying if you hold an ADR, you hold nothing. That's not necessarily true. You hold a receipt for the actual shares that a bank has bought on a foreign exchange, generally like the Hong Kong exchange. For Alibaba, or maybe it's the Chinese exchange, I don't know. But wherever it trades real time, the bank buys it, and then basically you buy it from the bank. So you're holding an ADR, not the actual share. Is that a big deal? I don't think so. He tends to think it's a big deal, but that's how these foreign stocks can trade on the American exchange, right? So they're not worthless. And his point is, well, if something goes wrong and you have a lawsuit and blah, 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 yeah, it would be the bank's issue, not yours. You would simply sell your receipt for it, sell your paper off, and then the bank can deal with what the disposition of the actual shares, right? But I think it's a great deal. And, I was talking with a couple of folks yesterday about, what if we go to war with China? Well, economies actually tend to do pretty well during wars. And we're talking, short of nuclear war, right? If you're obliterating each other, that's different. But, if something kind of a tiff broke out, we'll, be all right. The middle class in China still needs to buy stuff, right? That's called Alibaba. They still need to watch their shows on TV. That's IQ. I still need to play their video games. That's Tencent. All that's still going to go on. And Didi, there's also people going to be there's also going to be people that are going to need to ride share, right? Which is Didi. So I am not concerned with getting completely out of the China names because of war either. So, but anyhow, that's what an ADR is. It looks like our trade's not going to hit while we're talking here, but the phone is blowing up, so I better tend to that. And with that, I'm gonna let you guys go. So I'll close this out when this hits later on today. With that, you guys have a good one. We'll see you back tomorrow with far less noise. Talk to you soon.